So there is a lot of press coverage these days of the world of tax avoidance, but very little focus on the industry which produces tax avoidance schemes on an industrial scale. And that is primarily what I'm going to speak on today, though the monograph also talks about how accountancy firms are involved in money laundering, bribery, corruption, and running cartels. There isn't anything that they probably would not do. So a lot of people's impression is that the world of accounting or accountants respond to requests for some clever financial engineering, but actually they are capitalist organizations in their own right. They have to create a demand for their own products and services, and that is exactly what they do. So this is a quote from a US Senate inquiry in 2005. And as we look around in universities in the UK, we can certainly see real engineering closing down, financial engineering expanding. Business schools are the biggest faculties, biggest money spinners. UK is awash with accountants, about 320,000 professionally qualified accountants, which is more than the rest of the European Union put together, about 6 times as many GPs, and we don't produce anything, we just like to do financial engineering. So when Gordon Brown went to China, never mind the leaders of manufacturing industry, partners from the big 4 accountancy firms I'm going to look at were with him. I don't know what they were trying to sell in China, but we can have a good guess. So we are making a huge social investment in financial engineering, 320,000 professionally qualified accountants. They have to be educated, go to schools, have the benefit of healthcare and everything else. At the end, we are neither free from tax dodging, nor we have good company financial statements, nor we have freedom from frauds or even good corporate governance. And I keep wondering, why is it that we tolerate this? And I speak about that as an accountant. I am an accountant myself. So we have armies of lawyers and accountants. They ensure that the letter of law is complied with, but the net result is that companies and rich individuals manage to dodge large amounts of taxes. I'll give you some estimated numbers in a moment. There are also problems in the way people study accountants. There are well-known sociological schools on the study of the professions. There are a whole variety of theories. Some simply accept the claims of professionals, whether they are lawyers or accountants, saying that, well, we have knowledge, we serve the public interest, whatever that may be. And then there are more critical theories following the thoughts of Max Weber, and also some Marxist theories as well, which put professions in a very different light. But it is interesting, most of the sociological studies really associate accountants with any social ills. So when taxes are avoided, millions of people have to forego education, healthcare, pensions, public infrastructure. But there is very little association between these things in these studies. And it is not easy to study. First, you can't get a research grant because professional accountancy bodies and accountancy firms are not going to give you research grants to do this kind of thing. Secondly, even if you get research grants, it's difficult to get hold of data because accountancy firms are ultra secretive. They're not going to tell you. And as was mentioned earlier, a lot of information comes out in litigation, court cases, or often if somebody blows the whistle, that is the only way you really find out, unless you are on the inside. But so I used to work in industry, and I regularly arranged transactions for oil companies, which helped to shape their tax bills. That was many, many years ago when I also believed in Father Christmas and the Tooth Fairy, but I'm different now. So accountancy firms basically are rewarded for serving capital. That is what the Marxist theories would say. They also help the state to, in a sense, to provide a particular kind of social order, saying capitalism is not corrupt. We have audited the accounts of banks. You can believe them all. They're telling you the truth. That kind of logic to it. But at the same time, they're undermining the state's ability to provide public goods and social investment through erosion of taxes. So the taxes have eroded significantly in the UK in 1982-83. In the early years of Margaret Thatcher, tax revenues expressed as a percentage of GDP were about 45%. They are about 37-38% now. And tax revenues tax burdens have shifted from capital to labour consumption and savings, higher rates of VAT, intrapersonal allowances frozen, tax bands. You hit the higher tax band much earlier than you did compared to many years ago. And also national insurance contributions have been jacked up and petrol duties linked to inflation and all kinds of things. So accountancy firms are behind many of these things. So accountancy firms have basically been engaged in transfer of wealth from ordinary people to capital. So in 1970s, the real rate of return, the average to capital as a whole, was about 3.9%. After the recession, it's now 12%. And before the recession, it was much, much higher. So we can see what's been happening. Corporate tax returns have been maintained in a very, very significant and real way, possibly by cutting back on people's wages through tax avoidance, loss of pension rights for people, and many other things. So British capitalism is generally not competitive enough, and its returns have been maintained through a whole variety of other devices. So these accountancy firms have to create demands for their tax service. Within accountancy firms, tax departments are profit centers. They are assigned targets as to how much profit they must generate. If partners don't do that, they don't get their bonus. Individuals don't get their salary increment. They don't get promoted. So therefore, you have to go and create demand for your products, for your services. And I'll be telling you one or two tactics in a moment, what they actually do. So they basically tell us tax is a cost, which is cost mean it is a burden, it is a negative. The minute you say something is a cost, the self-serving answer is it must be reduced, must be eliminated. So I would say that if anyone is to generate wealth, you need investment of three kinds of capital at least. Shareholders may provide finance capital. They get a return, dividend, for example. Employees invest human capital, must get a return, wages. Society invests social capital, must get a return, that is tax. But in accounting language, tax and wages are a cost, it's a burden. Dividend is a reward. So there's a whole language of accounting which needs to be dismantled, which is ideologically loaded, okay, needs to be tackled. And we are nowhere beginning to do that. So accountants also facilitate mobility of capital, more of that in a moment. So here are the global leaders in tax avoidance, just 4 accountancy firms: PricewaterhouseCoopers, Deloitte & Touche, Ernst & Young, and KPMG. They have more offices than Coca-Cola on this planet, which might be interesting to some people. Their income is now a bit higher compared to the time I prepared this table. Now they are the 54th largest economy in the world. They are able to provide jobs for potential ministers and also recent ministers in order to ensure that they are hooked into the political system, which basically buys them insurance. None of the big 4 accountancy firms in this country have ever been prosecuted for peddling tax avoidance, even when the courts have said it is evasion, which is unlawful, illegal. Neither of them have ever been disciplined by any professional body, even after a court has said what you were doing is unlawful. That gives us some insight into the regulatory system. So they have a large amount of accounting and political clout. If you were to open up the accounts of any company, you will not know the country in which the company has paid its tax bill. You will get one global figure. So a bunch of us have been promoting what is called country-by-country reporting. We are saying we would like each company to publish a table, tell us what your sales are in each country, what your costs are, how many employees you have, what tax bill you pay, and so on. That is absolutely opposed by the big 4 accounting firms. They also fund the accounting standard setter called International Accounting Standards Board, and that is opposed to it as well. But we are working away, trying to advance that kind of idea of a country-by-country reporting. So we don't really know. So if we had that table, we could look at it and say, okay, News Corp has a lot of sales in the UK, Sky TV, The Sun. How come it pays so little tax? Or Microsoft booked about 16 billion of its revenues in Ireland, well, with about 80 staff. Must be very, very productive staff who can generate that much sales, and basically the tax bill has vanished in other places. And Apple was in the news yesterday. You may have read about that. So we are not going to get those kind of rules without a struggle. So accounting firms are global networks. They have about 80 offices in what are called offshore tax havens, often places which levy no income tax, no corporation tax, no need for any company to publish accounts, no need to have any audit done. Cayman is a good example. And they are certainly not peddling their traditional services. They are basically trying to go through the legal motions to create appropriate structures, shadow structures. So that is what they are doing. They also have close relationship with banks and law firms. So in a moment, I'll give you some examples. Firms are secretive. If you looked at the account of PricewaterhouseCoopers, you'd be hard pushed to find out how much money they are making from tax avoidance, or even what the senior partners are paid. So very, very secretive. That is permitted by law. Okay? So they have elaborate organizational structures to manufacture tax avoidance schemes. They are manufactured on an industrial scale, like somebody manufactures cans of baked beans. People buy them off the shelf. Again, examples coming up. And they have very close relationship with policymakers and government departments. If you were to look at the Treasury, in the monograph I said Pinstripe Mafia, towards the end of that we indicate the recent appointments at the Treasury, the Office of Budget Responsibility, Tax Simplification, many of the partners from Big Four, formerly who excelled at devising tax avoidance schemes. They are now running the show. Britain has been singularly unsuccessful in tackling tax avoidance, and I don't hold that much hope that it will succeed in the foreseeable future. So internal study by HMRC said Big Four accountancy firms are behind almost half of all known avoidance schemes. And they were in 2005, HMRC estimated making about £1 billion a year from tax avoidance. You will not find that information in the accounts of the firms themselves. Okay? And their basic Christian Aid said they are impervious to any social consequences. So organizational culture within the firms is kind of rotten. Bending the rules to make profits is considered to be a managerial, entrepreneurial skill. You give the impression you're complying with law, but you don't really do that. Main focus is to make money, and that is what people are trained to do. So tax avoidance is all around us. UK may be losing anywhere between 40 to 150 billion tax revenues each year, which is bigger than the austerity cuts. Some economic models suggest the figure is close to 100 billion. So UK government, when we first tackled it, said it was only 2.5. We said 100. Then they eventually started going up and up. Now they admit to 40 billion. We still think it is about 100 billion. USA economy is about 10 times as large as UK's. Their GDP is about 10 times as large, and they'll be losing between 345 and 500 billion. The Treasury publishes this model as showing how they estimate this figure. UK government refuses to do such a thing. Developing countries, about $500 billion a year. The highest amount of foreign aid received by them is about $120 billion a year. That was last year. So and a lot of that foreign aid comes with strings attached. Tax revenues are not returnable. You don't need to undertake any structural adjustment programs. Don't have to cut down subsidies. Don't have to do many things. And it gets much worse. I've written some other papers on these things, so I'll tell you a bit more. Obviously, there's a limit to what law can achieve. There's a whole problem of how do you tackle these things. Every year when the government introduces a finance bill, 30 to 40% of it deals with so-called abuses. Some people call them loopholes. We have suggested an alternative approach. We call it a general anti-avoidance rule or general anti-avoidance principles. Basically says that if there is no real economic substance, no real wealth is created, any transaction which is designed to avoid tax is a sham, must be ignored. The government is going to introduce something along those lines, but much, much weaker and watered down. Basically, a lot of NGOs are getting together and lobbying for that, so we don't hold that much hope. There are about 11,000 court cases each year dealing with tax avoidance. Think about huge amount of public expenditure. And large number of these relate to the schemes devised by Big Four. And tax inspectors themselves don't want to get embroiled with this. If you are dealing with it for the next 5 years, your chances of getting promotion are very limited. Somebody's going to say you've not been very productive. So the system oppresses them to make early settlements. And that's why you've been hearing about Vodafone and many others. Okay. Many of the avoidance schemes, when challenged, turn out to be evasion. How many still escape? We remain problem. So KPMG devised a scheme for WorldCom. They call it management foresight. I never heard of such an asset in accounting life. Been doing accounting work for 44 years. Management foresight is very simple. You go along to somebody, any of these telephone mobile companies, you say, well, you can sell a package. Package could be you can have a mobile phone on its own. You can have it with text, with internet, with all kind of bells and whistles. They called it management foresight. And the answer was, having created this asset and located it in Delaware, where there is low or no tax on technical know-how, then you charge everybody else royalties. So people in Bangladesh, people in UK had to pay a royalty for using management foresight. The upshot is $20 billion of revenues gathered, which escapes all taxes. Of course, it is all tax-free because the same company, another subsidiary within the same company running it. So I'll skip through some of the others. The amusement arcade one is interesting, case of RAL. KPMG devised a scheme. Basically, a company was told, if you restructured yourself now make out that you are owned by another entity in Jersey, and your amusement arcade is in London, because you are operating your parent companies in Jersey, now it is assumed that the service would be sold by the company in Jersey, which under the EU rules at that time was free of VAT. Then every pound you put in, you would say there's no VAT payable, and you will keep the whole pound. In other words, you will avoid VAT. And that was found to be unlawful. The biggest exposure of KPMG's culture came in the US Senate hearings. The firm had 500 tax avoidance schemes off the shelf, which the law required them to register. But at the most senior level, they did calculations, and they are produced. Some extracts are produced in my monograph. They worked out that it was profitable not to comply with the law. Okay? Senior people agreed. Then they estimated, if we are caught, what the fines would be. Then somebody compared the fines with the income and said, hey, we're still quids in. So they decided deliberately not to tell the authorities what they were doing. And of course, whistleblowers have a habit of not behaving. So KPMG is eventually, a number of its partners have been to prison. If you were to look on its website, it will make huge ethical claims, social responsibility claims. There have been none of this episode on their website. Eventually agreed to pay $456 million fine, which at that time was the largest ever. They admitted criminal wrongdoing. Okay, these people are now advising the UK government, okay, which is kind of interesting. Ernst & Young, did the same kind of things. Directors of Phones for You paid in gold bars, wine, platinum sponge, therefore didn't have to pay income tax or national insurance contributions because they are payable on cash emoluments. This was not considered to be cash. Gordon Brown then plugged that. Next day they come up with another scheme. Like imagine, if you're working at a bank and the banks did this, employees are paid in a currency which is depreciating fast, say like the Zimbabwean dollar, which is depreciating fast. So I can give you £1 million loan and they say, right, I'll translate that to a Zimbabwean dollar. In a year's time, you've got to repay the loan. Zimbabwean dollar has depreciated at such a rate, you won't have to spend £1 million to buy it. You only probably got to spend about £50,000 to buy the Zimbabwean dollars to satisfy the original loan. Therefore, the other $950,000 is tax-free, and it is a loan, not taxable at all. Okay? You satisfy the low. So they've been doing all these kind of things. Here's a nice phrase, PITA, code. And many of you came across this probably. You saw this if you went to the supermarket and you got a receipt. It said 2.5% is basically for servicing your credit card. That was again a VAT dodge, because they were saying that is a financial service. And again, the judges said it is unlawful. So all the firms have been at it in various ways, and they've all been found out. This is something really creative. I'll just take a moment or so. PricewaterhouseCoopers, the partner who devised this, is now running at the Treasury the Office of Tax Simplification. He's actually running that. Exxon, profit 36 billion, taxes paid 99 billion. How can that be? Then you read the small print, and this has appeared in newspapers as an advertisement to counter the tax avoidance lobby, anti-tax avoidance lobby. What have they done? They have added up all the taxes they collected, like petrol duty. That added up the VAT they collect, as well as income tax paid by employees. And they said, oh, this is our tax contribution, which is utterly wrong. They haven't borne it. It's got nothing to do with this. Nobody's challenged this with the Advertising Standards Authority. Maybe I should have. But I was going to enter some of these companies' accounts in the Booker Man Prize, but I missed the deadline. And this is going on around us all the time. Utterly misleading statistics. It might as well, say, well, if somebody asks me what taxes you paid, and I add up the Tesco's tax bill because I shopped there and I've contributed to it. This is just utterly wrong. So 100 largest companies have not been paying much tax in the UK, but PwC sell this thing called total tax contribution, and its creator is now advising the government. That is the thing I find very, very puzzling. So Deloitte have been at it. We know about Vodafone, many other things. So major firms are basically not what they claim to be. Okay, they show no concern with any notion of justice, fairness. They are busy undermining the state. Thousands of graduates are taught the dark arts of tax avoidance. We don't teach them at universities, these things. They learn this at accountancy firms. And accountancy firms are not being investigated in any way whatsoever. So these firms are really directly responsible for lots of our social problems. And they deserve to be scrutinized, but they are rarely scrutinized. So major firms enjoy a monopoly, state-guaranteed monopoly of the external audit function. They create these tax avoidance schemes for their clients, then audit the same and say all is well. Well, all is not well. So that again needs to be looked at. So lots of research opportunities. If anyone is interested, they can talk to me later. And because I'm being told I've run out of time. And I thought that quote may be interesting. Okay. Yeah.